Good morning, retail traders. Welcome to the Sneaky Snake Trading Strategy. Please hit that like button, subscribe, and ring that bell. And if you have any comments after this video, please make them. I'll take note of it. We're going to talk about the Dow and the SPY, and we're going to talk about Tesla. Earnings are coming up this week. It's going to be a big earnings week. So we're going to see what everything's going to say. Anything that's a little positive is going to be good for anything. The low expectations they put out during the last earnings period, some of them didn't even give guidance. So anything that good, I know these guys on Wall Street, they're going to take it and they're going to run with it. We are at a critical level right now, and the first thing we're going to do is look at the Dow Jones. Now I have the monthly chart up here, and I did a Red October video, plus I called the Dow Jones down here right around the 26,000 level. And right now we've hit that 28,665.92, which is the top of that expansion pattern on the Dow Jones. We've got a couple major key support levels that we hit. We hit the triple top on the monthly time frame. We hit the expansion pattern as a support level, and we also got the 65 EMA on here. My trading strategy includes moving averages. It also includes candlestick patterns. It also includes candlestick patterns that form, and it also includes chart patterns, along with the price and action of a trade. So like I said, the Dow Jones, it did hit a nice low down here, and the fat cats are frothing at the mouth. They're keeping a close eye on the Apple, and they're keeping a close eye on Netflix for some reason. Neither one I'd be looking at, but they are in the SPY, and it's just something that they're watching close. They notice all these lows, and they're just frothing. They're frothing. They want to buy the dip. They've been talking about the June low on the SPY for since June, since now, last month. They were wanting to hit that June low and bounce up off of it. So we're going to go ahead and go straight to the SPY now and look at it. We had the yearly low on the SPY, and we broke that last week. We made it down to 348.11. Now if I pull up the 3-year chart, and we hit the 21 SMA last week. We had one of the weirdest trading days that we haven't had probably 5 times, I think, maybe 9, where we opened up with a 2% close and we end up closing with a 2% high. And that doesn't happen very often, and usually that's a leading indicator that we're in for some more trouble down the road. It could also tell us that maybe we're trying to hit a bottom, and they're going to try to fluctuate and consolidate and try to keep these lows going, or at least the last low we had, where we just go sideways and create a Darvis box like we did up in here after we had that year low up here and had a nice little bounce to the 200. So the resistance line, if we do break, will be that last one we had right here on down, which would be the 21. You'd have to break the 21 EMA for it to run up and hit the 51 EMA. If not, we can pull back to the double bottom at 348 and create new lows. And on a 3-year chart, we hit the 200 SMA, which is another catalyst for it to hold. Plus we've got this here ascending Darvis box that'll be our next support, with a little bitty pivot right here, maybe at 338.65. If it does break last week's lows, expect it to come back down more and maybe top out at the pivot point inside of this Darvis box, which would be this here previous high. I'm going to go ahead and chalk that in for now. Mind you, that's 337.48. We could see that coming, but right now, like I said, we're at a critical support spot on the weekly chart off the 200 SMA. It can run up and hit the 9, find some resistance, and then may run back up to the 21 on the weekly. And that would be a nice little spot, because I can see a channel here and I can see a channel right up in here. I'll color them in and show you what I'm talking about. I play these Darvis boxes inside, outside, underside, and above. So you got your little support level right there. Then you've got another one right down here. Right now we're playing around the bottom of that 200 SMA on the weekly. Now Tesla's got earnings coming out this week. The hype is that everything's kind of just flat right now, which is good, especially when you're in a world recession. But all I see in the headlines is, especially last week, I got so upset with CNBC last week. They spent an hour talking about Elon and Ukraine, and just, to me, it just was not necessary. They've been bashing Tesla. I mean, they don't like the Twitter deal. I think it's a great idea, but the fat cats don't. They're a little smarter than me sometimes. I don't know about that. It seems like their conviction is always to the bullish side under this administration, and I can see nothing but pain. Nothing but pain. And I've been trading this market for 20 years. I was trading it during the Obama years, is when I first started. I started watching the market back in 1980 when I had Walmart stock. And I was just freshly out of high school, and now I'm 61. Kind of tells you my age. And I've been sitting at this desk for 20 years every day. So what I'm saying is, I don't think the sentiment is nearly as good as people are saying on the social media platforms, in fake news, and also in the White House. But they're always going to pump a Democratic president. Unless you're GOP, then they're always constantly bashing it. So here on the weekly chart, like I said, earnings are coming out. I love playing Tesla. It's my favorite stock. It's my number one baby. I'm bullish. I've been bullish on this stock ever since the IPO came out, and that was down at $54. And keep that in mind. A lot of fat cats did not want to take this trade because had to deal with electric cars. Now the sentiment has changed. The sentiment has changed. And they're going to try to pump up these other companies. General Motors, I think, will end up having to have another bailout. And that'll be number 4 for them before they start to really expand in this market. And then you got Ford. I love the Ford truck. I've owned Fords most of my life. But I no longer own a Ford. I have a Chevy. So, it's Chevy Equinox. The last truck I had lasted me 15 years, and I just loved that truck. It got me everywhere I needed to go. It carried everything I needed to carry. But we're talking about Tesla right now. Earnings are going to come out. I think they're going to be good. There's always a little bounce when it comes to the earnings. The momentum picks up, the volume picks up, the interest picks up. But the sentiment is just at its all-time low. All-time low, especially with this Twitter deal. I think it was a great idea. I still do, but I think he asked a little bit too much for it. He should have went in there with $35 a share instead of 54. So that was, I think, a bad decision on Elon's. If he would have went in there with $35 a share and shook it up a little bit, I think that would have been great, but he probably would have never bought it. They would probably never sold it to him at that. But that's it. I mean, the sentiment's bad. We've had 3 big red candles right here. We can definitely pull back. I mean, I've got different places on here that I'm looking at, and we're going to pull up. This is the 3-year. This is the last sending triangle pattern we had right here. Then we had 2 engulfing candles. And I think if we hold those engulfing candles at 196.14, where we had these double bottoms that held them before, I think we'd be fine right there to run this thing back up right around to the 220 area, 222. That's been my hard resistance for us to have the breakout at that 222 on the weekly time frame. And we did hold it last week, but this week we hit that year low, and then we broke that year low. breaking that year low means everything to me. It means we could drop a little bit more and then have a nice little bounce back up and have a new resistance. My old resistance was right around the 244 area. Now it's going to be definitely the 222, 224 area with a pullback no lower than that 196.14 to hold. And if that doesn't hold, we could see a pretty good drop back down here to this 167, 169, 170 area. And then bottom line support will be that 200 SMA on the weekly time frame. Now, I've traded this off earnings before. It has a small gain and then it always pulls back. People take profit when they have these bounces. So I wish everybody a great week next week. Like I said, the fat cats want to definitely bring this market up or try to find a soft landing, but it's been nothing but a hard landing. And we've had 3 good solid weeks of just downturn in the market. Maybe more. I mean, it's been, if you look at the Dow Jones, ever since the beginning of the war, it's been nothing but a downtrend. And that's the same thing with the SPY. Let's type it in here. I've been trading one trade at a time. I'm not telling anybody to hold and invest. Once we start hearing rhetoric about the rates being stopped, slowed down, we can definitely benefit from a good run. Smellin' Yellin says, for us, success in oil price cap will see oil continue to flow into the market and countries benefiting from lower prices. So Janet Yellen, economic challenges discussed the IMF World Bank meetings. So the banks are having real bad issues right now too. The world banks and the war in Ukraine. Everything they're blaming on the war of Ukraine. I personally think I'm going to put all the blame where the buck stops, and that's right at the desk of the Biden administration. He's a paper tiger when it comes to the world problems, and the world problems have excelled since then. And that's all I've got to say. And he gave Putin the door, opened the doors, give all the commies to get a little bit tougher. China's wanting to pick on Taiwan. You got North Korea shooting missiles over South Korea and Japan. So, nothing's good. Nothing's good. Nothing's good. I don't know why they wait so long to bring this up. But nothing's good right now I've been watching this market for over 20 years. The only thing's good is that everything's so inexpensive and that the fat cats are frothing at the mouth. And they say, well, we like to predict the market 6 months in advance. Well, they couldn't predict the recession coming. I did. Right when the war started, I said we're in for a downturn, big downturn. I said that at the beginning of the year. I said the only problem we'd have now into next year, I was bullish into next year, but my only one catalyst was us being a paper tiger and then all these wars break out. And that's what's happening. So I wish everybody a great trading day. I'm always a bull when I walk in here and I follow the trend. And please try not to over trade. If you can get one good trade out of the day, call it quits. I call the beach trade. I've made up this strategy, the sneaky snake strategy last year to catch knives. So if you want to subscribe and ring that bell, you'll get my future blogs, and I'm live on YouTube every day talking about the market. And I'll continue doing it until the end of the year. And then I'm going to decide what my next move is, if I want to retire, if I want to just be live for an hour a day on YouTube. I always have something to do with stocks, no matter what. And that's it. The sneaky snake trading strategy.